G'day folks, welcome back to another update for high grade copper and US crude oil. Now both are in a bearish momentum on the daily at least. We're going to include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel, and also reference our +1 videos for a deeper dive into our trading strategies. Remember, we're not telling you to exactly buy at the prices we're showing here, we're just trying to teach you a daily strategy and discipline to follow. In short, copper looks structurally stronger, driven by supply constraints and long-term demand drivers, green transition and infrastructure, though not without macro risks. Crude oil, conversely, is facing headwinds from excess supply and soft demand, making it less appealing from a bullish standpoint unless a disruptive event intervenes. So first looking at high-grade copper on the weekly chart, you can see the prices above the moving averages, giving us a bullish momentum on the weekly. Notice also on the CCI that's coming and touching the moving average band, which is giving us a very cautious outlook for a bullish move on the weekly. So it might actually break to the downside sometime soon. On the daily, that's already broken below the moving averages. You can see there the moving average band is constricted, and I've marked there an arrow where you would have started taking short trades if you're trading on the hourly in the direction of the daily. The CCI is already broken lower, although notice it's also pulling back a bit. So again, this could go either way. It's a bit of a neutral positioning at the moment for high-grade copper on the daily possibly. And if you go to the 1 hour chart, what we're looking for is any divergence. And you can see there the highs of the CCI are the same highs as the price movement. So pretty much a consistency there. With the last divergence we had was back here. We had higher lows on the CCI versus lower lows on the price, and that actually broke up. And if we drew a Fibonacci on that, between that point and that high there, you can see there easily broke up through the 23-38% range. But even if we took it to that high, that still broke through the 23-38% range. I'll just mark that as a minimum retrace we expected. So it fluctuated in that range for some time, and it's still pretty much in that range as we speak. Now on the back test, let me just get rid of that Fibonacci. On the back test, we've started back through the whole period. This is on 1 hour time period, and basically you're going in the direction of the daily, but also following the price moving averages and the CCI moving averages, you go long. You can see there the moving averages are going long until it starts to break to the downside there, as well as the CCI. Then going long again there. And now notice here with each of these periods, you've got bearish divergence. This is the major one back here. You had a couple of major bearish divergence. You could have gone long and closed out each of those points, going long there, closing it out, going long, closing it out. Again, paying attention and respecting the bearish divergence. Where we are at the moment, you could have gone long in that little period there, possibly, if the daily is going long, and we know it's not. Pretty much at the moment it's going sideways, so probably stand clear until we get more decisive movements on the daily at least. So again, according to the daily, you would have started going short from that period around about the 3rd of November, and that looks like this on the back test on the 1 hour, going short from about that period. And you would have taken those little short trades there, closing it out whenever the CCI breaks into that moving average range, or alternatively, wait for the moving average range to start turning up, which it did there. And you would have closed it out there with possibly holding one contract. Avoid trading during this period and then going short again during that period there, and then possibly closing it out around about this period. So this is US crude on the weekly. First off, you can see here it's been pretty much in a decline throughout the whole period since about the start of 2020 or middle of 2022, with a few little breaks above the moving averages, but overall the overall trend has been bearish, and we're still in a bearish momentum with the price and the CCI below the moving averages, and there's no divergence currently on the weekly. On the daily, it's been again a very roller coaster ride, but predominantly bearish. A couple of small breaks, but you can see there the moving average band is still in a decline along with the CCI, and also there's no divergence currently on the daily. The last divergence we had was back here, a double bottom on the price versus higher lows on the CCI, and that broke well above to the 100% retrace level. On the 1 hour time period, again we're looking for any micro moves. Again, that CCI is moving in line with the price, so there's no divergence that I can see there. And what that looks like on the back test, if we go to the daily first off, we would have started going short from about the 5th of August. And on the back test from about the 5th of August, taking short periods when the moving average of the price and the CCI is in a decline, and closing it out when they start moving to the upside. Now you'll notice here we had a few drawdowns throughout that period, and you would have avoided that by closing it out. You can see there when the moving average band on the on the price starts curving up, along with the CCI, you would have closed it out, possibly holding a contract or two, but especially after noticing a bullish divergence back here versus double bottom on the price. Again, avoid these long positions because we're in a short positions on the daily. And again, you would have avoided these drawdowns. You can see they're going long only during that period if you're trading on the long side, but again, not in the direction of the daily, so you would have avoided that long trade. And where we are at the moment, we had a bullish divergence here and going short during that little period and closing it out at that point there once the moving average band started curving up. And at the moment, you could possibly be in a couple of short positions here. You can see there the entries made and nice little short trades to be taken during that period. If you'd like to look at trading some shares on the long side, we've run a bullish scan each weekend, and these are some of the trades we've taken and completed since the 21st of September this year. Quite a few little trades there, just small portions or small amounts, and that's reaped so far in just over a month, 9.67% return. So to get access to those bullish share scans, why not subscribe to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in a future update.